Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. To start the new week, the Australian Central Bank last week's decision to revise lower growth and inflation forecasts initiated a bout of weakness for the Australian dollar. With the low now being fresh for 2019, other than the flash crash, which was around 67 cents, is the market's tumbled now to a low of 70.60. It is assessed that further weakness could be seen for the Australian dollar. This week, the talks between US and China are about to commence with Steve Mnuchin, along with other members to discuss the tariffs. It was assessed that the meeting between President Trump and Chinese President Xi isn't likely to happen by the deadline, which is March the 1st. My technical outlook, though, from looking at how the market's trading, is that the pressure should remain, and I do expect to see further weakness. Now, a move under 70.70 does give us a potential target of 69.45.60. From the technical implications, a trending ADX and MACD declining, and also the RSI still negative, supports my view. Euro is getting closer and closer now to its objective of 112.55.75 after the dollar index on Friday surges. Now, the dollar index, which measures the greenback strength against a basket of 6 major currencies, strengthened further to post a fresh 2-month high of 96.46 late Friday. For the week, the index gained 1.17%, its most significant weekly increase since a jump of 1.23 back in May 2018. As I mentioned, from a technical view, I do expect to see the further weakness and claim its target of 112.55.75 and reassess from there, with any rally likely to be capped around 113.75. The dollar yen still, with its lackluster price action, still failing to stage any significant direction. With a cap of 110.2025, the market is still poised, I believe, at this stage, even though it did reject the midway point at 50 to challenge the 109.55 level and reassess from there. The pound is a little bit weaker since stabbing its objective, which was at 128.40.60. Overall, I do expect to see further weakness in terms of the fact that we could still see a hard landing for the Brexit, which the divorce is on the 29th of March. Let's see how the market plays out today, and further weakness could see a challenge of 129.20 and then beneath there 128.40.60. The safe haven demand is continuing after a rebound of 1,302 last week, now trading at a highs around 1,314. The market could post a further challenge to the upside and take on the challenge to 16 and maybe even go on to 22 to 24, which was recently the high around 26. Reassess from there. Dips likely to be shallow with 09 support. My oil view still neutral after the recent breakdown and taking out $53 a barrel. I'm still waiting for a direction until we get some kind of view. The current indicators are dropping slightly, implying that we could see a move to $52. But as I mentioned, I am neutral and I would like to see further direction on the outlook of the technical play. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to this new week.